Did the housing market already top, and are we on the verge of a larger correction? Well, it's looking like we may have actually topped back in 2022 when we had that enormous interest rate hiking cycle when rates went from 2.5% to 7.5% in less than a year. So I want to take a look at the median home value in the country, average home value, see how they compare. We're also going to analyze some major market inventories to see what active listings are doing and if we have any signs that could be pointing to a similar situation to the 2008 financial crisis. If you're new here, my name is Ian Phillips. I'm a realtor in Southern California and I am obsessed with housing market data. So I'm uploading weekly videos, diving into the housing market, kind of seeing what we're going to be looking at for the next couple years as we are getting a pretty large change in the economy. So if you like this video, subscribe for more. Let's get straight into the data. Okay, so taking a look at the median price of houses sold in the United States. And if you're curious where this is coming from, sources are the U.S. Department of Housing and Urban Development. So there is no question as to if the data is legit. And this is from the Federal Reserve of Economic Data's website. So if we look at 2022, which is where house prices peaked, not many people are actually aware of this. We peaked in Q4 of 2022 where the median home value went to $442,000, and now in Q1 of 2025 we're at just under $420,000 or $416,000 to be exact. So we've had about an 8% correction, 7% correction from the top of the market. We did get down to 414,000, so not really much different to where we are. But a lot of people are saying in their area, house prices are skyrocketing. So what does this mean when we have the overall market topping out 3 years ago, but in some pockets house prices are up? And that is actually what's going on right now. The real estate market is so location dependent that even though we have the overall market topping out almost 3 years ago, some pockets of the country are up 20% since 2022. Where I live, for example, in Orange County, house prices are up 20% since they had their 15% correction back in 2022. And then if you look at places like Los Angeles, a major part of California, house prices are flat for the last 3 years, but you have pockets inside LA, that have appreciated by 10-15%, but you also have pockets that are selling for less than what homes were purchased for in 2022. And then you look at San Francisco, which has just been hammered. Prices are down 25% in that same period of time, and you actually have the condo market suffering even more when some homes are selling for less than what they were purchased for in 2019. So the housing market right now is very location dependent, and we can't really use a blanket statement like the housing market topped in 2022 because it's so city dependent and sort of state dependent, and we're going to be diving into some of that data as well. But let's take a look at how it compared to 2007, the run-up to the financial crisis. We had this huge rise from the year 2000 all the way up to 2007 in Q1. House prices went to about 257,000, and then 2 years later they dropped to almost 200,000. So about a 20% correction, but actually in some markets, prices were cut in half. I know in Southern California and inland California, as well as in Florida, prices had a 50% correction. It was buy one, get one free at the bottom of the financial crisis. But I do want to dive into some inventory to kind of see how it compares to that period of time. But just to confirm that we did top in 2022, let's look at the average sales price because this is the median. So the average, it looks like we topped in Q2 of 2022 where we went to 525,000 and about a 5% correction down to 500,000. So that data is confirming that the overall housing market did top in 2022, which kind of makes sense as we had interest rates go from 2.5% to 7.5% in a very short period of time. But again, you did have some pockets carry on going up. The overall market in general did have a pretty decent correction in the second half of 2022. So average price back in 2007 topped around 322,000, and then 2 years later went down to 257,000. So about a 20% correction there as well. Now I do want to look at housing inventory to kind of see where we're at right now. And this is the overall housing inventory in the United States. And 2022, right before we had the large interest rate hikes, we were at 346,000 homes on the market, which is the lowest in history. Now, this data unfortunately does not go all the way back to the financial crisis, but housing inventory peaked around 4 million homes on the market right before the financial crisis started to recover. So we are nowhere near those levels right now. Active listings, just under 900,000 homes on the market. End of 2024, we went to 950. I wouldn't be surprised if this goes over 1 million homes available for sale by the end of 2025. There are a couple states, we'll get into that in a minute, that are seeing inventory levels skyrocket, and they are surpassed pre-pandemic levels. So as you can see, overall market still below 2019 levels. July, August 2019, we were almost at 1.3 million homes on the market. So we're nowhere near those levels now. I hope we get back to those levels. I am not someone that wants prices to keep going up forever. I would love if we just get back into a neutral market, because that is ideal for me. I have a ton of friends and family who want to be able to afford a house one day. And if we keep seeing 15-20% appreciation year over year, they're just never going to be able to afford a house. So active listings, getting back to a normal level, but still below pre-pandemic levels. Now I do want to jump into a couple state-specific areas because it's a little scary what's happening in Florida. Take a look at this. Pre-pandemic levels, we had 150,000 homes on the market, and then we had interest rates plummeting, which brought inventory all the way down to 35,000 homes available in the entire state of Florida. And look at what is happening right now. Basically, second half of 2022 just started skyrocketing, carried on going up, and this line doesn't look like it's heading down anytime soon. It is basically just straight up to the right. 177,000 homes on the market in Florida. So I would expect that the Florida real estate market goes through a little bit of a correction. I don't know if it'll go through a crash, but I know they are having huge insurance issues over there, as there were a couple hurricanes in the last 2 to 3 years. So it's making home ownership very unaffordable in the state of Florida. I'm sure there are some counties, some cities in Florida where inventory is still scarce and homes aren't selling for above list price. But a few of the realtors I'm talking to over there are noticing inventory levels are spiking, and home builders specifically are struggling to get their already built homes off the market, and they're offering incentives, credits, rate buy downs to try attract a lot more buyers into buying a home. So Florida probably gonna be going through a pretty decent correction. When you have inventory going from 35,000 homes to 177,000 in a 3-year period of time, you are bound to have a pretty decent correction. Now let's also take a look at Texas, because there are some issues over here as well. As you can see, pre-pandemic levels, 106,000 homes available for sale. And then, similar to Florida, went down to 32,000, nothing available for sale. This was, by the way, we were having a mass exodus from California to Florida and Texas around this period of time. So it's no surprise that you had home values skyrocketing over there, and that was reducing available homes for sale. All the while you had interest rates at 2.5%. For a lot of people, it was a no-brainer to sell their house in California. You could buy 2 or 3 homes cash or extremely low interest rates in Texas and Florida. So we are going to look at California's inventory in a second, and it may actually shock you what's going on there. But similar to Florida, Texas is having a huge rise in active listings. And as someone who is always interested in investment properties in the future, I've been monitoring the Texas real estate market for the last year or so, and I noticed about 6 to 8 months ago that there were an enormous amount of rentals hitting the market, and rent prices were getting dropped within a couple weeks of being available for rent. And a few months later, you started to get an enormous amount of homes hitting the market. So my expectation is that you had a lot of people buy investment properties, and then all of a sudden, they weren't able to rent them out. So instead they just said, you know what, I'm just gonna sell my house. I'm not making any money from it anymore. I may as well just list it on the market. And I kind of think that is what's happening in Texas at the moment, because inventory has gone up 3x, almost 4x since 2022. And we are above pre-pandemic levels in Texas right now. See, even back to 2017, you had 105,000 homes on the market, and now you have 113,000. So you have Texas and Florida making up a quarter of the entire country's active listings, which is pretty significant. I don't know if there was a time in history where you just had two states making up over a quarter of all the active listings. So that is pretty substantial. So if you are in Texas and Florida and you're looking for a home, you probably have a lot of negotiating power right now. And if you're a seller, I would expect your house to sit on the market a lot longer. Now let's look at California, because it is the opposite. Yeah, we had pre-pandemic levels, 86,000 homes, 82,000 homes in 2019, and similar to both the other states, inventory got all the way down to 22,000 homes available on the market in January of 2022. And then interest rates, we had a huge spike. Homes got bought up, big dip down again, and we're kind of in a slow uptrend, 57,000 homes on the market, but nowhere near the levels that we saw in pre-pandemic of 82,000, 87,000, 84,000 back in 2016. So I'm wondering if maybe there's some sort of shift where we had the California exodus, so now people are actually like, you know what, I actually want to move back to California. I don't know if that's happening, but it kind of seems like there is a little bit of reversal going on where people aren't really interested in Texas and Florida as much as they are in California. Now, I will be uploading a video about property taxes and how California is a significantly better state to own real estate for the long term, specifically for property taxes. But that's it for this video. Hope this gives you a good idea of what the market is doing. As for where it's going to be headed, I don't think we're heading into a financial crisis. I do think we're just going to be trending back to more of a neutral market where we get 3% appreciation. Maybe some areas, some states, some cities, counties are going to have negative growth. But again, I do think if your area is desirable, I think it's always a safe time to buy a house. In my opinion, areas where the top 10% can live, I don't think they're going to have much of a correction, because if you look at the top 10%, they have stacked an enormous amount of cash relative to everyone else. If you like this video, subscribe for more. Once again, my name's Ian Phillips. I'm a realtor in Southern California. So if you're looking for an agent in the area, reach out. I'd love to chat. We can go over a game plan, see what makes the most sense for you, whether you're buying or selling. I'll see you in my next video.